Okay, guys. So just a quick update. So if you look at the account, as I was teaching from Thursday's night session, so we have £100 here, and as you can see, I'm just going to break down a few of the trades just to give you a bit of an insight into what we're looking at when it comes to the price action here. So, all right, this account started out small, taking time, running a swing trade and putting price action in the next, the necessity of what it needs to be. But I think, it's good to show account details as well. So this account was at £100 here. Now we're currently right now at £600 in equity, so £500 profit. And when we look at the price action of what we had here, so why did I take this trade for the sell on gold? So we had now for my students, as you know about order blocks and algorithmic levels, okay, without we having to go too far into the detail here, we had a very interesting area of price action here. Okay, what I term as a validation point, an algorithmic level right around about here. So this isn't support and resistance. I don't trade support and resistance. This is we use algorithmic levels, okay, and a couple of other features of price, okay, not to be condescending, but we don't trade as retail traders because that's not going to get you anywhere apart from in losses. So when we look at the price action here, what did we have? So roughly around about this area right here, we had the first instance of what we were looking for. So we had price action here, we had a stop punt, what we needed. Okay, stop orders, buy orders are being stopped out in a very nice way. And then we had the announcement of the coronavirus vaccine right here. Now, what the price gave us was another re-entry into the order block that produced this massive sell. So this tiny H4 supply zone is where our entry is, as you can see. And this supply zone here, when the price came back to this area, this was what we needed in order for us to produce a massive long. Okay, massive short, sorry. So when the price recovered here, I gave this trade to all my students and they've made massive profits because they've swung this even into March. And as you can see, even with a 0.01 lot size, we have quite a good piece of profit. This is £182. So, almost 2x, almost double the account just from this one position. Okay. Now, last night I was talking about the Canadian dollar. I guess I'll recap now. Now, whenever there's a coronavirus situation, or to be honest, not a coronavirus situation, but just say a crisis. Okay, one of the things that central banks always like to do, as I've always talked about in our Thursday night sessions, is the fact that the market always, or the gold price is always heavily reduced or heavily put down. Okay, and this is because central banks know that inherently fiat money or fiat currency, that system is broken. And so they want to discourage investors and traders from investing in gold. Okay, so they've purposely pushed the price down. Some of the things they do is to sell physical gold. It's very well known that among some anyway, that many central banks, many central banks put like the Bank of England sell about 400 tons of gold every year. Well, I'm not too sure how much they do right now, but that's what they used to do on the books anyway. It doesn't mean it's physically moved, but let's just say on the balance sheet, that's what we see. All right, so moving forward, we have this scenario here where the price has, given this movement here and given us a massive sell. All right, now the price has moved past equilibrium. And so the price, now we're getting into discount pricing in the market. We were very strongly in this point of where we are with premium pricing. And so the price being shorted off right now is perfect. Now we have a liquidity pool right now here at this double bottom area that the price left, during April. And I'm expecting the price to run those lows. I'm expecting gold to short quite a bit before we get the long. Now, if you look at the structure, whenever there's a coronavirus period, as I said, or coronavirus kind of situation, I call it coronavirus periods because of something my students said, I keep calling that. But really and truly, when we have a financial crisis, when fiscal policy and central bank policy become the same thing, we get this situation where gold has a massive run up and it usually makes a new all-time high, as it has here, about $2,075. And then the price starts to short off. But when it pulls back, the next movement here, if you can see the structure, we have a very simple market structure of a A to B swing. So here's the A structure. All right, here's the B structure here. And then we're looking for the C. So here's the ABCD structure that we're looking at the moment. and ABC structure, and we're looking for the pullback. Now, the next movement that's going to happen on gold is going to be parabolic. The last movement we had, now it's hard to see on this chart, but I can show you from memory the last, if you come to the live sessions, you would have seen that the last movement we had was right here. So in the last financial crash, you'll see that we had a massive run up the year before. 2007 was, a massive run up, okay, into 2008 when the financial crisis was at its height. And then we see the price pulling back, okay, right beneath, the high created here from the massive bull run in 2005. Now, when the price had pulled back, as we can see right here, we had this massive long for the next 3 years. The price heavily inflated because whenever there's a financial crash, many of the rich and many people try to hedge, which is not a trying to, is the right thing to do, hedge their wealth inside of gold to protect themselves from currency devaluation, okay? And so this is why we see this massive run up for the next 3 years, and gold creates a new all-time high. And then we've had a similar scenario with the coronavirus. We had the price push long, we had the pullback in March, Black Thursday, and then the price pushes heavily long to the new all-time high. Now at this pullback, what I'm expecting to see with the price is definitely going to be another massive run up. And so I'm expecting in this next bullish run for gold to do some serious percentage in numbers. And this is why I'm in the short, okay? Now, my targets were officially these equal lows, and I may close and re-enter. Either way, it's still very good profit, but we should end up in very good profit. I'm looking for probably this low to be run about here. This is the aim. And when we look at the price action, moving forward, this short is only temporal. As the price is becoming cheaper, okay, investors are going to flock to it and start to buy, and the price should run up very strongly on the high. So without doing a very deep technical analysis, this is the reason why I'm in this trade for the short. Okay, I'm using the order block that was created from the coronavirus news, which is strong enough to propel the price short. So we should see some massive movements moving forward there. All right, so pound CAD, let's have a look at that. So I've locked in quite a bit of profit now. So pound CAD, okay, another algorithmic level that we're looking at, okay, that price was following is this one right here. Now we've had the D1 stop hunt. For my students, you know what that is. We've had that D1 stop hunt of the price action for the buy orders. And as you can see here, all I've done, I haven't over risked, because some of you are thinking, how have you gone from £100 to £620? Now these orders, I put these in yesterday, as you can see. Okay, I've been held in for the whole week just from yesterday. And with this price action that we're seeing right here, we were waiting for this movement right here. This is what I wanted to see. Okay, my initial entry, for those of you who have watched my CAD breakdown that I did on Wednesday, I actually had an entry up here, some right here, but I think I dragged my stops to even too quickly, so it stopped me out, and then it shorted. Otherwise I would have had another position up here. But as you can see, the price is selling off, and you can really see the Canadian dollar is gaining a massive strength. And looking forward into the future, I'm expecting my targets right now is for the previous month's low to be run. So this is the low that I'm looking for to be run by the price. And because it's a Friday, I may actually close and re-enter, because Friday can be a bit of a tricky one. But this is, what I'm looking for in terms of a position to take. I believe the price should get here either today or on Monday, who knows? Okay, but however the price behaves, I'm going to be wise with it, because we don't want to lose out on this massive profit we have. And usually on Fridays in the Forex market anyway, the price is very, characteristic of it to basically start to reverse on you and go the other way, okay, and stop everybody out. So we may not actually, depending on how the day goes. Right now it's 12 o'clock. The US session is going to start in about an hour. And I guess when the US session starts, Canada will start not too far after that, Ontario and Toronto. And when that happens, we might get a big push of liquidity that will help to push this price further down. So maybe by 5 o'clock, 6 o'clock, the price may have done a few more pips from where we are. Now, if the price does hit the target, then this account will be at £1,000 today. So from 100 to 1,000. Now, I haven't done anything special. All of these things I've done, you can do too. I've taught my students how to do so. And I've used dynamic risk management to be able to get multiple entries. And my effective risk actually is in profit, but my effective risk for each trade was basically, I was compounding the risk I've taken. So 1% was here. The 1% risk I took Once the price started to get into deeper profit, stops to even, re-entered again using some of our strategies we use for. Now the entries I actually did were on the 1 minute time frame, but no matter what time frame you are, it's the same. But my 1 minute time frame entries were all across here. So you can see if I drag it back to where we were. Okay, my 1 minute entry, one of them was here. So I used this order block right here, another area of importance. Okay, on the 1 minute, my other entry was up here. So I used, I believe, where was it? I think I used this, so either supply zone or demand zone. I believe it's here I used, yeah, somewhere around here. Once the price broke below here, I was ready to go for another short. Yeah, here we go. And then up here was just the first entry, just in a normal supply area. Okay, I used this supply zone and that was it. Entry stop loss was just above. So as you can see, guys, profit can be made. Once a good opportunity comes along, you can maximize on the opportunity every time it comes. Now, the market has great opportunities every day, but there are some opportunities which are like an absolute steal. So when those ones come along, as I teach you guys how to maximize on those opportunities. Now, if I had put one position, I would have still had great profit, but the fact that I can have multiple positions with the same amount of risk as I would have had one, I think is absolutely beautiful. And this is what we want to go for. So now looking at the price, I'm keeping my eyes on this area right here, this M1 order block here. If the price does re-optimize this and start to use it as a demand zone, I may just close and re-enter. It depends entirely on what the price does. Now, what I usually do on MetaTrader anyways, I just set alarms so that I can keep an eye on things when my eyes are not behind the charts, if I'm editing or taking some calls or something, you know. So in this way, it helps to be able to produce something that, you know, we can use for the future. So this is something I really like to do, okay, when a great opportunity comes along. And yeah, so let's quickly switch over screens. I'm going to go through the CAD news, okay, and Canadian news, and just a bit on what we had with the rate decision and also what we're looking for with the strength of these currencies. Now, just before I do that, what I did do, guys, I would say this to you. This was my own gameplay as well, is that I've taken advantage of using some pair correlation. So what I've done here is that I've taken a short. Now, I had the pending order originally set here, but the price didn't come back to the principal order block, but I used another type of order block right here. So once I saw the accumulation of price over here, I decided to, you know, take this trade based on that. Now the stops are at even here, okay? I might close this position out before the week is out, but what I'm looking for with the Canadian dollar is for the price to get to the next available liquidity pool, which will be above these highs here. So these equal highs above here, which are from 2019. This is where the target is set at. Now, I do believe the price is going to do a lot more than that, but this is what I'm looking for in terms of price action. You know, so if these things all play out, I mean, in terms of money, I think this will give us about £1,200 on this account, something like that. And that will be a fantastic, you know, trade to have taken. And these lot sizes are not so large, 0.11, things that are, you know, easy to do. All right. Now, for you to be able to trade like this, it takes good dedication and training. Doesn't come overnight. I can't lie to you and tell you that is. Anybody that says that is a liar, but it does provide you the opportunity, once you understand these things, to take advantage of the situations that happen in the market. Okay. And this is what you want to do. So right now with this profit, we're in a good position. All right. And this is the aim of everything that needs to be done. So this is my goal, to continue running this trade. All right. I think one of my students messaged me with some profit here. All right. And we're going to see what happens, you know, in the future with this price action here. So let's see what the price done. And then, well, let's see what the price does, I should say, and then we move over here. So I'm going to switch over to some charts. All right. I'm going to do some pair strength correlation, and we'll look at the rate decision. I think what I'll do, let me switch to the first chart, and let's just look at the Bank of Canada, see what they've said about their currency, and then we can go from there. Okay, so I'm going to switch screen. Let's have a look at that and see. Let's see. So let's do a new share. Let's switch the screen. Let's have a look at what's going on. All right, so it's saying the Bank of Canada website is, so let's wait for that. Maybe, I mean, Google does take a lot of RAM. This is one of 3 laptops that I have. I think this one has the smallest RAM out of it. So I guess let me close some things so that we can get a better view. So whilst this is loading, what we really want to see is that from a fundamental perspective, we want to look at, so here we go. We want to look at what, you know, the Bank of Canada is saying about their currency. Now we know intrinsically that fiat currency is a system based on literally, as the word fiat denotes, promises on words, on figures. It's not backed by anything. It's just a manipulative game. Okay. Now, on Wednesday, we had the rate decision and we also had the rate statement. So I just want to rehash over some things and click on it. So right here, it's right here. So looking at this, we have about 5 or 6 paragraphs worth of information. All right, we just want to see what's going on now. So the Bank of Canada today has held its target rate overnight at the lower band of 0.25%, so 0.25, and the bank rate at 0.5%, and deposit rate at 0.25%, which is not so bad. Now the bank is maintaining its extraordinary forward guidance, reinforced and supplemented by its quantitative easing program. So in other words, what this is saying is that the Bank of Canada, to keep supporting the economy, is printing more money from the machine, of the printing machine. That's all it really means in layman's terms. But this quantitative easing, okay, of about $4 billion per week, okay, would, in a sense, we're looking at around about just over $200 billion for the year, roughly. If we were to look at it, just over $200 billion for the year. So looking at that, okay, we have quite a bit of money, okay, pumped into the system, which is an important point that we need to look at, okay? So the Bank of Canada has continued with its quantitative easing well, my mind is wired for it to be a problem because quantitative easing, I don't believe should be a thing like that in the same way, but anyway. Now, this quantitative easing program putting more money into the system, so bailing out the private sector and also the public sector. Now, in this financial crisis we've had from 2020, what's very, very important for you guys to understand here is 2020 is not like 2008, because 2008, you know, I usually say history doesn't repeat itself. I say that history rhymes. Now, 2008, when we had the financial crash, when this quantitative easing program or this forward guidance, which is what central banks will always say in response to any crisis, because there's nothing else they really can do, only the private sector was bailed out. So money, you know, balance and credit was given to this, you know, the financial sectors, the private sectors internally. So the benefits of, you know, short-term benefits of this, you know, influx of cash was only for businesses and companies and etc., and not for the people. And so we didn't really see much currency devaluation as a result. We didn't see, you know, mass, you know, weakness, devaluation going forward, because the supply of this currency was internal with the private sector, not with the people. Now with coronavirus, because of the nature of the incident that's happened, not only the private sector has, you know, received money from quantitative easing programs or stimulus programs, but now stimulus has gone into the public, into the people, okay, into the public sector, into the you know, to the mums and the dads, you know, to support their families. You know, in the US is the famous stimmy or the stimulus check of about $600, and I think it's been increased to a bit more. But however, this is what we have right now. So this massive production, you know, producing of currency, printing of currency, all right, short term is going to fix the problem, but we know long term, you know, it's going to devalue the currency massively. And this is why this situation is different. And therefore, we need to look at things from a deeper perspective, okay? So now looking at this, when we look at the price action of moving forward, all right, what we're going to look at here is that across, you know, different sectors, the global recovery, you know, the recovery of the economy, world economy, you know, from the effects of COVID-19, still has unevenness across regions and sectors. Now, the US economy recovery seems to be gaining, you know, momentum and it is clear that the virus infections are declining, and physical support, which means more quantitative easing again, has come in to the US, for incomes and for consumption. So stimulus packages and also for people to be able to purchase. So this is kind of propping up the economy, coupled with the low interest rates from the Federal Reserve and, every other central bank around the world. Money is, currency is cheaper right now. Money is cheaper to borrow, to spend and to do business with, and etc., which should cause a recovery in the economy, which is usually the answer to, or the central bank's answers to everything. Now, speaking about this, the global yield curves have steepened, and this is largely reflected in the growth in the US growth outlook, but the financial conditions remain highly accommodative, and oil and other commodity prices have risen. And this is the key here, because oil now, Canada, as I've taught in Thursday's lesson, is a commodity currency, not a consumer currency, and therefore it's used, the exports that it provides, are very highly linked to the currency itself and how the strength of the currency is affected. Now, Canada's biggest export is oil, and they have a large market share in the global oil market. And therefore, for that reason, the best way I can put it is, you would see as the price of oil rises, okay, it's one of my students, I think he's got some profit, so he's very excited. Well done, Amen. But what you find is that when the oil prices go up, the Canadian dollar will show some strength because they are very highly linked with each other. Okay, they have that kind of relationship. Okay, and therefore you will see these kind of things take, place. So why am I saying this? Moving forward, I'm in pound CAD and CAD CHF. I'm very bullish on the Canadian dollar, and the Bank of Canada themselves are saying that the Canadian dollar has been relatively stable against the US dollar, which I do agree looking at price action, but has appreciated against other currencies. And the US dollar has shown some real, very, crazy strength in the last 3 or 4 weeks. I think it's artificial strengthening, to be fair, but either way, the Canadian dollar actually has been pushing USD CAD much shorter than, I would have first expected. I was looking for some longs, but the longs were short-lived. I was in a few longs with the students, but, the price didn't stay in a long position on the bullish side of the market for too long, intraday anyway. So let's look over at what we have. So if we do some pair correlation analysis now, all right, I'm going to pull up, I'll just look at the pound versus the Canadian dollar intraday, and we just want to look at their strengths against gold. Now, remember, gold is true money. Okay, it has a true store value, it has a limited supply. It can't just be, created out of nothing. Okay, and therefore the supply and demand of gold is what I consider to be true supply and demand. Okay, so let's get this XAU GBP and then XAU CAD. So when we look at gold, we can use it as a very, very good measuring tool, all right, for us to know what exactly is going on when it comes to the price action of, certain things, certain pairs, certain behaviors within the market, and that we see when it comes to trends. So let's pull this up. So I'm going to go for XAU or gold versus the pound. And we're going to compare gold versus the pound to gold versus the CAD. Now, it's a very simple tool you can use if you want to be able to measure pair correlation strength between two currencies, and you want to do that. Now, traditionally with retail traders, okay, especially, I think, me being a retail trader myself, okay, or trading like a retail trader, I should say, at one time, I had the same understanding too, that, if you want to check the currency's strength, you need to compare it to other, if you want to see how strong the pound is, look at pound versus the Canadian dollar, and then maybe something in the reverse, like euro versus the pound. If you see that they're, going the opposite way, then you kind of have a picture of the pound. That was kind of the brief teaching I had, which it works sometimes and didn't work sometimes, but we don't want something that works sometimes, So one of my passions is to find things that work all the time, and that's about it. So let's have a look at this. So I'm pulling up my gold. Let's get this out. So we need gold GBP. So XAU GBP. Pull this back up here. All right. And we want to compare this to, so TradingView is very fantastic for this. You know, we can actually compare things. If I pull this up and click compare, XAU, CAD. All right. So if we do a comparison, one of the things I like to do when I do the comparison, I try to use the same broker for each, because with TradingView, one of the fantastic things is that it gives you price feeds from many different brokers. So I try to use both. Okay, so pound CAD, let's see, come do the comparison. Now what we want to do to compare this, we're going to use line. Okay, so I'm going to pull up line here. All right, and we're going to look at the strength, okay, from different perspectives. So I think we only need one of these, so I can delete this and I can delete that. Free up some RAM on this older computer I'm using. And let's have a look at the price action here. So what I'm going to do is we make the comparison here. Okay, now it's loaded. So we're going to go intraday and just have a look. Now, I'm not holding pound CAD short forever. There is a liquidity cap on pound CAD that I'm aiming for. Okay, and I know the price will get there, but let me just put this as it is. So if we go on the daily, let's have a look. Here. So on what we have right here, pound CAD, we have, if we're looking at the price action here, so I'm using the minuses right now. So if you look at this right here, now the pound itself, you know, speaking right now, March 12th, okay, is a very different picture from March 12th last year. But the pound itself has very, very good fundamentals behind it, which is giving the price of the pound a very, very massive boost, especially against something like the Japanese yen, which wants to be inherently weak anyway, due to the nature of its economy, you know, heavily, you know, the GDP is heavily attached to their exports. Okay, well, their GDP, their exports account for a high amount, you know. So when we're looking at pound, you know, GBP, we can see right here we have minus 15%, and whereas we have minus 14% here. So this minus 14%, okay, the less of a minus you have towards zero whenever the price is negative for both, suggests that you have just a stronger currency. So we can see here that the Canadian dollar is at minus 14.13%. And at the moment, in terms of currency performance, I would say the pound is definitely top three of one of the strongest currencies in the market right now, speaking in Q1. So we have minus 14%. Gold has moved against the Canadian dollar, or from this perspective anyway, but the minus moves against. But let's just take the numbers as they are. We have minus for 14%, and then we have minus 15% here. So you can see even against the pound, the Canadian dollar has a lot stronger, I would say a lot more strength in terms of as a currency compared to its movement with gold. The minus means that gold has moved against it, and if it's positive, it means that the currency's moved against gold or moved it, yeah. So we can say right here straight away, we have at least a 2% difference, which is massive, okay? And therefore, we should see a stronger increase in strength on the Canadian dollar intraday, hence why I'm on the daily time frame, okay? Now, why is this? The key thing here to remember, okay, is that if we compare the fundamentals, okay, and I'm going to put this here, one of the fundamental things to compare right now, and I am still a very heavy technical trader, and without using fundamentals, you can actually be able to still read what the price is trying to tell us, but I'm going to put this here. So if you put the Canadian dollar, so if I put CAD fundamentals, okay, sorry, I spelled that completely wrong. So if you look at CAD fundamentals, what do we have? So key points here to remember the Canadian dollar. So Canadian dollar has their low interest rates. They're keeping to a quantitative easing program temporarily, which is good. But the key thing here is what it's attached to. Okay, the CAD is a commodity currency connected to oil. Okay, so I'm going to put this here: large exporter of oil, crude oil. All right, so this is price positive for currency, for the CAD currency. Okay, so, and also strength positive. Okay. So because there's strength positive and also currency positive, this is what we find, you know, going forward with the Canadian dollar. Now, why is this what's the biggest thing here? And I'm going to explain. I'm going to put the fundamentals of the pound, and then after we can compare the two. So if I put this up here, here's the CAD fundamentals. These are GBP fundamentals. So the pound, of course, is also a commodity currency, not to the same level or degree. Okay, but what we have with the pound fundamentals at the moment, okay, so one of the first, if not the first, European country to have mass, you know, scale vaccination from COVID-19. That's one thing. And now another aspect that you need to think about is that also where the, you know, Pfizer and AstraZeneca and these companies worked with Oxford, okay? So, you know, UK based in scientific, let's put this here, scientific institutions working, let's put this here. So UK-based scientific institutions, okay, put the country here. So these UK-based scientific institutions, okay, working on novel COVID vaccine. All right, now what is this? This is investor positive. So this is investor positive for DFI. Okay, so direct foreign investment. Okay, now we do have one other thing because of Brexit. Okay, there is still some question marks around Brexit, but we also have what's caused the price to go along is that we do have a Brexit has been finalized and executed. Okay, so that is price positive in a sense. Okay, there are other factors around it, but for now, you know, the fund, it has been executed in that way. We do have, you know, some resolution there in that regards, which is important. Okay, so as comparing the two, for me, fundamentally, I would say that the Canadian dollar's fundamentals are more of an important fundamental to the entire world, more than just the pound. Now, I'm not saying that the pound hasn't got an important place in the world, but it's just that compared to the Canadian dollar, because it's an exporter of oil, oil is something of a commodity in limited supply, okay, that the whole entire world needs. Now, of course, every country needs each other, and there's certain countries that are very strong financial centers, which is London, which I believe is first or second on the top, you know, the list of top 10 financial centers of the world for business. But even aside from that, okay, that hasn't fully recovered itself. So the fundamentals of Canada, are, you know, coupled with the world recovery, would make the Canadian dollar very highly, you know, positive in terms of its price or its strength, okay, moving forward. And I expect the Canadian dollar to only recover and get even more deeply, you know, as strong, you know, even stronger than it currently is, okay. And, you know, for the trade that I'm in, comparing the two, you know, the Canadian dollar still has much higher strength compared to the pound. And so we should see a continuation of more short action moving forward. Okay, so this is my view when it comes to the Canadian dollar and why I'm so big on it. And I'll be looking at a lot of CAD pairs in the future. So if we end this off and I look back at my charts, let's have a look to see where we are. So, okay, right now we're at £520 profit, which is not bad. Okay, the price seems to be holding around over here. If it doesn't I may decide to close because I'm seeing some bull traps forming over here. So price might be tired for the week. We don't know. We'll see at the end of we'll see the price soon enough. All right. Now you know, if you look at the pound versus the Canadian dollar, one of the major plays that my students are looking at right now is this trade right here. Now, when the pound went long, specifically during the time of December, when we had the news and we got around surrounding the coronavirus and possible vaccination and things like that, we saw a massive increase in the strength of the pound. Okay. Now, one thing that was left behind here, which is probably one of the only pairs that has this, is a massive liquidity gap. So right here, we have a liquidity gap between 1.69477 and 1.68960. And I'm expecting pound CAD to make its way there very shortly. Okay. This is one of the targets we have looking at the Canadian dollar, that the price should make its way down for the short. And we should see, you know, quite a big movement going forward here. This movement we see here, is very, very highly likely to happen. And in a situation right now where we have, you know, very strong fundamentals, the Canadian dollar, I believe, is one of the strongest, if not the strongest currency in the market. We should see a continuation short. Now, the entry that we initially wanted was further up here. Price didn't give us that, but it's still giving us some good pips right here. But I'm not going to be completely phased by the price because we could get the price reversing. And of course, we want to lock in as much profit as possible from this movement. Okay. And what we want to do right now is see, at least take some targets from here. If the price gives us more entry, then we go again. If the price decides to pull back up again, then we follow the price. As one of my, you know, most integrous friends I've ever met and an amazing senior coach within the company talk says is, we want to be like water when it comes to the price. You know, as water takes the shape of its surroundings, we want to have the same kind of action when we observe and trade the market. So this is my overview. Right now, I'm about 500% profit so far on a £100 account. We're at £600 profit right now. And this is just basically primarily came from Thursday's trading in the afternoon. So in one day, basically, if you want to put it 24 hours, you know, we've got about 400% extra profit. And it's highly possible for you guys to do the same. For those of you watching on YouTube, I spent the time and put some effort in to make a course that can help you guys. You know, I want to be able to give you a good foundation. You can check out our free course. All right. If you want to see more of these results, we have a Telegram group you can join as well. If you want to just keep up to date with stuff. And yeah, we have a newsletter you can sign up to also. And there's quite a few things that are available for you guys to make sure you get the best. Okay. We want to share, we want to give. You know, in order for us to be able to help, we have to give, and we love to give. So check those things out. I hope you enjoyed this video, guys. All right. And take care. Okay, guys. So just a final update. So looking at the accounts now, we're getting close to our profit target. We're about to hit profit. Price is about to hit the targets that we've set in place. So I know the price is going to do more, but in this game, you always want to go for, you never want to push it. So you want to make sure that you take your profit where you set your target. And if it does more, then you can enjoy the more. Okay. So let's open this up. Let's look at the 15-minute target. So we're very close to the target. All right. We're a couple of pips away. All right. Here's the target being hit. We'll see in a moment. All right. So looking at this trade, it was a fantastic trade. It still has a long way to go. When I look at the price action, we're only just about there. I believe the price is going to do more, but yeah, we can take this profit and call it a day and be happy with that. And yeah, we'll take it from there. So as this price is crossing over, we could either close right now or, you know, allow the profits to run, and we can call it a session. And from there, we know the job is done. So just about to close out here, guys. I'll go on the 1-minute chart so we can watch this live. All right, so you can see the price is accumulating there, pushing towards the target. It's about to touch it, or just about. So we should get all trades closing. Let's just make sure all of our take profits are there. Okay, this final trade doesn't have the take profit, so I'll put it there. So we want 1.73451. All right. Okay. And this is what we're going for. So price should hit the target any minute from now. We could actually just close. I mean, what I would do whenever there's a situation like this, I would lock in profits around about here, somewhere, you know, where the price is almost just hanging around, dancing around the area, lock in as much profit as you can by here, and you can go from here. So put this out. This is what we have going on. All right. And let's see what the price does. So sooner or later, sometimes as a trader, and this is advice that I can give to you all. I mean, as a trader, sometimes what you want to do is to get yourselves to a point where you not become one with the price, but you have a very good relationship with the price that's unemotional. Okay. Just yesterday, this account was roughly around about £200 profit, and now it's at almost going to be £1,000 profit by the time we finish. So as we watch this crossover, I guess this is nice for you to see. Okay. Have a look at the price. Now, I do think it's going to do slightly a few more pips from here. So I might be cheeky, just drag it a little bit lower, put them all in one line if you want to. If the price gets to your take profit by a few pips, you can close. Sure, this is going to shoot down past it, but hey, here's some profit here that we can take. Just look on the higher time frame, look at what's going on. So you always want to keep your wits about you. Okay. Price is just about to hit the target. So coming from, a trade like this, it's been a fantastic week, and it's only going to get better. So let's have a look. So profits are closing out now, so we can see here profits are about to be taken. The price is hitting the line, so it should close us out. If not, we'll close it out here, but we're just closing out here with almost £900 profit from a £100 account. All right, and that's about it. I think I'll close it here myself, and we can call it a done deal. And that's it, guys. All right, hope you enjoyed that.